So for this video, I wanted to discuss early IRA withdrawal penalties. All right, so IRAs, basically two different types of accounts, traditional and Roth. You put money in there, it's kind of stockpiled until you hit the age of retirement, which is 59 and a half, and then you can start drawing money out. Traditional IRAs, generally when you take the money out, it's subject to tax. When you take the money out of a Roth, it's not subject to tax, right? So that's the high level, the differences between the two. Now, both IRAs do impose penalties if you take money out too early, right? So if you're taking money out before you hit 59 and a half, there is a chance that you're going to be subject to a 10% early withdrawal penalty. And this is calculated and reported on Form 5329 when you file your Form 1040 tax return. So how do we avoid some of these IRA penalties? Well, there's a couple of methods to waive the penalty if you qualify. And then the last one, which is unique to COVID, we'll talk about, which is just a unique one-off exception. But for the most part, these are the four big ones, right? So this is not an all-inclusive list on methods to waive the penalty, but these are the ones I see most often used. So the first one is health insurance, right? If you're unemployed and you're still paying for, if you're unemployed, normally you would have health coverage to your employer. Now that it's terminated, you're unemployed, you've got to get it outside of your employer, right? So if you go to the exchange and you purchase health insurance and it's $200 a month, you're paying the premiums, you can take money out of an IRA to cover those health insurance premiums, and the money you take out will not be hit with a 10% penalty. Now, if you take money out of the traditional IRA, it's still taxable income, all right, because it's coming out of a traditional IRA, but at least you can avoid the 10% penalty hit. Now, in order to qualify for this, you technically have to be on unemployment compensation. That's how the IRS verifies that you are in fact unemployed. So if you've collected 12 weeks of unemployment comp, you can take out the money and you won't be subject to the 10% early withdrawal penalty. The second common occurrence I see is withdrawing money for the first time home purchase. Right, so you can withdraw up to $10,000 and again won't pay the 10% penalty if it's your first single-family home purchase. Now, in order to qualify for this, you must not have owned a home for the 2 years preceding this home purchase. And so, it can be your second home, but there has to be a lag, right? So if you had a home, sold it, then you were renting for a number of years, then you might be able to still qualify for this exception. Third is paying for unreimbursed medical costs. So to the extent that your expenses aren't covered by insurance, you can withdraw money to cover those costs, anything that exceeds 7.5% of your AGI. So for example, let's say your AGI is $100,000, 7.5% is going to be $7,500. And so any expense over $7,500, you can withdraw money from your IRA to cover it. So let's say your total medical bills for the year were $8,000. Minus $7,500 is $500. So you can take $500 out of your IRA and not have to pay the 10% penalty on that $500. The fourth one here, paying for the cost of college education. This will apply to the taxpayer, him or herself, or the children, right? So if you have to take money out to pay for your college tuition for your kids, you can do that as well, so long as they're still dependents. And then the last one here, which is unique to COVID, obviously because people are unemployed and the market was really in shambles because of the COVID lockdowns. The CARES Act added this early withdrawal exception, which said that if you took money out during 2020, you're not going to be subject to the 10% penalty. The amount had to be less than $100,000. But if you were having to withdraw money during that 2020 tax year, you could avoid the 10% penalty. Now, if you've already filed your tax return and you paid the penalty, you can amend it, right? So if you took money out of your IRA during 2020, you recorded as income, you paid the 10% penalty, and now you're seeing this video and you realize, wow, I didn't know I could have waived that penalty. You can file an amended return, 1040X, attach the 5329, and take the COVID-19. It's a qualified disaster exception. And so that'll help eliminate the 10% penalty, and then you should get a tax refund for whatever the penalty you paid. Okay, so that covers it. I hope you found that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again soon. Thank you.